Hey everyone, welcome back to Corporate Decoder. Today, International Land Alliance Inc. ILAL just filed a Form 8, and I am seeing a move that hints at their funding strategy. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is raising cash through debt and warrants, which tells us something about how they see their immediate future. Alright, let's dive into this filing from International Land Alliance Inc. This is a pretty straightforward report, an 8K, which usually means something significant has happened that the company needs to tell investors about pretty quickly. The main event here is that on May 19, 2026, the company entered into a financial agreement. Think of it like taking out a loan or a line of credit, but with some extra details, they've issued a convertible promissory note, which is a fancy word for a loan that can be turned into stock. This note has a principal amount of up to $385,000. That is a chunk of change for a company with a market cap of around $26 million and only 6 employees. Let's break down this note first to raise an original discount of $35,000. This means the company receives $350,000 up front, but will owe the full $385,000 later. It is like getting a loan with a fee built in. Then it accrues interest at 10% per year. That is a pretty standard business loan interest rate. The loan is due in 12 months. But here is the crucial part, it's convertible into stock. This means the person or entity lending the money can choose to convert the loan plus interest into shares of International Land Alliance's common stock. The conversion price is set to be the cheaper of two options, a fixed $6 per share or 65% of the lowest stock price over the 20 trading days before the conversion. This means that if the stock price drops significantly, the lender can convert the debt into a lot more shares, which can dilute existing shareholders. Along with the note, the company also issued a warrant. Think of a warrant as a ticket that gives the holder the right, but not the obligation, to buy a certain number of shares at a specific price in the future. In this case, the exercise price is $10 per share. This warrant lasts for 5 years, and importantly, it has a cashless exercise option. This means the warrant holder can use the value of the shares they are entitled to buy to exercise the warrant without paying cash out of pocket. This is generally good for the warrant holder because it allows them to acquire shares without needing additional funds. One more detail on these shares is that they come with registration rights. This basically means the company is obligated to help the investor register these shares with the SEC so they can be freely traded on the open market. This protects the investor because it ensures they can eventually sell the shares they get from converting the note or exercising the warrant. This section just confirms that the convertible note is a financial obligation that the company is now on the hook for. It's essentially a formal acknowledgement of the debt. All these securities, the note and the warrants, were sold without being registered with the Securities and Exchange Commission. This is permitted under certain exemptions, like Section 4, Art 2 of the Securities Act, which is typically used for private placements to accredited investors. Accredited investors are generally considered financially sophisticated individuals or entities. This means the offering wasn't made to the general public. It was a deal with a specific qualified investor. And here we have the signature from Frank Ingrande, the Chief Executive Officer, confirming all of this. The date here is the 1st of June 2026, which is a bit after the event date of May 19th, which is typical for filing these reports. Looking at this, what International Land Alliance Inc. ILAL is doing here is raising capital through a convertible debt instrument. This is a common strategy for smaller companies, especially those in development, as it allows them to access funds without immediately diluting their stock at current market prices. However, the conversion terms, particularly the potential to convert at 65% of the lowest traded price, could lead to significant dilution if the stock price continues to trend downwards. This kind of financing often signals that the company might be facing cash flow challenges or needs funds for specific projects, and is willing to offer potentially attractive terms to investors in exchange for that capital. Considering the company's market cap of around $26 million and its focus on real estate development with only 6 employees, this $385,000 raise is quite substantial in proportion to its size. The fact that they are offering these terms with a convertible note and a warrant suggests they are eager to secure funding. Past news also shows they've been active, with a reverse split earlier in 2026 and significant land sales reported in May of the same year. This suggests a company actively managing its assets and seeking growth opportunities, but also one that may require frequent capital infusion. One significant risk here is the potential for dilution. If the stock price struggles, the convertible note could be converted into a large number of shares, significantly reducing the ownership percentage of existing shareholders. The warrant exercisable at $10, while higher than the current price, also represents potential future dilution. What I am actually looking for next is how this capital is deployed. Will it fuel growth in their land development projects? Or is it primarily to cover operational expenses? The success of this funding hinges on the company's ability to generate returns that can offset the cost of this debt and the potential dilution from its conversion. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded if you found this breakdown helpful. Smash that like button, subscribe, and join our Discord for more discussions.